In this video, I want to show you something that you can do to refine your entries using supply and demand zones. This video is going to be very simple, but if you don't know how to use supply and demand zones on a chart, I'll put the link to the video in the description below so that you can go and watch it. And also, I see a lot of people struggling to choose the perfect candle to confirm their entries. But in this video, I'm not going to touch on that because I've been sharing a lot of videos talking about those things. I'll also leave the videos to that in the description below. So in this video, I want to show you how to improve your stop loss and entries using the higher time frame and the lower time frame. So from this example, I want to use a 1 hour on the Euro USD. So as we can see from this chart here, we have a high that is broken over here. Also, we have this high that is broken here, and you can also see that the market is kind of bullish in a way, but the market decided to come and retest this demand zone here. As you can see, we have a demand zone and then we have a confirmation candle. This is a confirmation candle, guys. This will confirm, like what I mean, this is a confirmation candle, guys. What I mean is that when price come to the zone, it confirms the bullish with this candle here. If the market decided to shoot lower, or maybe if you want to buy here without any valid reasons, the market is still shooting lower. What if the market breaks to the downside without even confirming? So that is why I decided that on my trades, I will confirm my entries on the zone, because in that way, I will minimize a lot of potential losses in my trades. So in this case, this one here will confirm my trade that this is going to be bullish. So from here, we can also clearly see that the market closed with a candle that is not a bullish engulfing candle here. So if it's not a bullish engulfing candle here, I will put my horizontal line below the candle. So this one here will be my entry and then my stop loss will be below. But what if we want to minimize our risk? Maybe let's say this is a daily time frame, but we want to trade on the 1 hour. So meaning I will just go to the lower time frame. The lower time frame of 1 hour, we can use at least 5 minutes and below, or maybe at least 10 minutes time frame and below. But in this case, I'll move on to the 5 minutes so that I can show you this example. And for take profit in this scenario here, because the market is still bullish, we can target this high, because we know that this might be our higher high and this one here might be our lower low. I mean, this here might be our higher low here. So we will move on to the lower time frame, 5 minutes, so that I can show you the entry. So in this case, we just do the same thing in the lower time frame, but in lower time frame we use it as an entry. I just hope you understand what I'm saying right now. As we can see right now, I'm in the lower time frame. This line here is our higher time frame entry level. So meaning in the lower time frame, what we need to do is trade when price is below this line, or when price touches this line here. So from here, we just find a zone inside our higher time frame zone. We can clearly see that we have a zone here, but in this case, we can see that the low is around here. So we just increase this here like this to avoid unnecessary losses. So from here, we just wait for the market to come to the zone again. It went to the zone and then confirmed the trade by closing with a bullish engulfing candle here. So if it closes with a bullish engulfing candle, we just put a buy limit order on the previous bearish candle. We just put a buy limit order on the previous bearish candle here, on the open of the bearish candle, and then this candle will come and trigger the trade. But if price closes with a candle that is not a bullish engulfing candle, like on the higher time frame 1 hour, I didn't do this. I put the line below. So in this case, if the market, even if it closes with a bullish engulfing candle, you can still do something like this. You put your first entry here and then the second one here, and then your stop loss below here. So meaning you just enter here, stop loss here, and then you target the previous high here. That is 1:5. But if you were using another entry here, the stop loss being here, now that is 1:12. So you see, a lot of things can change while refining your entries. I hope this is very clear for you guys, but let me try to do another example so that you can understand this clearly.
In our backtesting, we use Trader Edge, a dynamic backtesting software that revolutionizes strategy management. This platform excels in consolidating all your strategies in one place, saving you both time and money, while providing clarity on which strategy suits the current market conditions. With features like date tracking, it keeps you motivated and organized. allowing you to monitor your backtesting progress effectively. Trader Edge also offers forward testing capabilities for real-time scenario analysis. To enhance your trading efficiency, find the link in the description below.
Yeah, from this example, early today on, I was talking with my other friend here. He told me that he entered a trade around here. I guess maybe he used a breakout to enter this trade, okay? And then his stop loss was around here, and then his target is around here. So from this case, I was demonstrating to him a couple of entries where he could have done to make this trade here to be more easily traded. So we draw the supply zone here. This is our supply zone here. And then if we entered here on the close, that means we are having a trade that is something like this. A trade something like this one here. That is 1:5, okay? For now, as you can see, if our trade setup entry was here, because this candle here is a confirmation to the downside, he could have missed this trade here. But then I'll also put an image on the screen so that you can see how I was explaining everything to him. You can pause the video so that you can see what I have done to explain everything to him. So if we move on to the lower time frame, 30 minutes, you will see everything clear. As you can see, it's the same thing, but this time, as you can see, this one here is our supply zone. Price touched the zone here. Price confirmed our entry with this candle here. Then after that, we can see clearly that after we had this confirmation candle here, because this is not a bearish engulfing candle, we will put our sell limit order here on the open of the confirmation candle. So meaning our trade will be triggered with this candle here, and then we put our stop loss above the zone because we don't want to risk more. As you can see, he could have saved a risk of 12 pips, and then the entry was around these areas here. He was risking around 53 pips on a trade. So right now we saved around 30 pips from the entry to the stop loss. So right now, as you can see, we have improved everything using supply and demand. Right now, the trade which was 1:5 right now is 1:11. That means it's 2 times the trade. I hope you understand that clearly, guys. But if you don't, I'll still post more videos like this one here. But if you like the video so far, please consider subscribing to the channel. That will be, yeah, I'll appreciate that if you subscribe to the channel, guys. And before I end the video, I want to show you something that will happen if you are using supply and demand. I have a way that I use it clearly. As you can see, we have our demand zone here. If this is, let's say maybe this is your higher time frame, the market confirmed your trade here. This one here, this level will be our invalidation level in the lower time frame. But then, as you can see, the market traded below this confirmation candle, meaning if you entered early here, you'll be stopped out by this wick here. But in lower time frame, you will see that there will be a change in market structure. But if you were trading this as your higher time frame, entering here, stop loss being here, you'll be safe. But in lower time frame, there will be some entries around these areas here if the market is still playing around. So that is what I wanted to say from this video, guys. But here in this structure, I will explain everything in the future videos, but I have included everything in the course so far. So guys, I'll see you on the next video, which will be up very soon.